morning, everyone. It looks like it is 11 Eastern, 10 Central, 9 Mountain, and 8 Eastern. So if you're on the East Coast, appreciate you, or West Coast, appreciate you joining us this morning. This is Learning with Leverage. This is a webinar from CUACG, Credit Union Audit and Compliance Group, and we will be discussing the Employee Retention Credit today. My name is Marcus King. I am the Vice President of CU Audit and Compliance Group. And as our speaker today, we have Amanda Ox. She is also with CUACG. She is the Director of Product Development, Training, and Client Relations. Just wanted to remind everybody that if you have a question, you can put it in the chat or you can put it in the question and answer section. I will be monitoring those throughout the presentation. I also, at the beginning, put my information in the chat box as well. So if for some reason you want to reach me afterwards, you have my cell phone number, you have my email address. We'll be happy to answer any questions for you. And then at the end of the presentation, we will be sharing this. It will be recorded and we can share it with whoever wants it. And at the end as well, if you would like to set up a one-on-one presentation, we can do that as well to go over anything more. So without further ado, I will turn it over to Amanda and let her get started.
Good morning. Okay, this morning we're going to do a brief overview of what the ERC is, who's eligible, what those eligibility requirements look like, what specifically it looks like for credit unions, and then some of the things we've learned along the way while doing this from the IRS, what you have to do to claim it, what your refund might look like, deadlines, things like that. Okay, so the Congress originally made the Employee Retention Credit for COVID-19 available in early 2020 when we were first experiencing shutdowns. There are a couple different acts that created the ERC and then expanded it along the way. We will get into later, what credit unions are eligible when, but it was first created in 2020 for the second, third, and fourth quarter of 2020. It was then expanded to include more employers and also more money available for the first, second, and third quarter of 2021. There was some back and forth a little bit. It is for a very small select group of people. It's available through the fourth quarter of 2021, but that is only for recovery startup businesses. So credit unions, for the most part, are not qualifying for that quarter. So who is eligible? A credit union may be eligible. There are two different qualifications to see if you qualify for the Employee Retention Credit. The first one is very easy. It's a significant decline in gross receipts for a calendar quarter. What we do for that is we compare the calendar quarters quarter over quarter from 2020 and 2021 to your same data in 2019 to see if you have what the IRS considers a significant decline. You can also have a full or partial suspension of operations. This is due to government orders. It can limit the way you do business. Essentially, we're looking at government orders that impacted the operations of the credit union, and these can come from any level: state, federal, local. CDC was a major one at that time. Okay, so what is a decline in revenue? We're only looking at revenue for this, not net income. For 2020, a significant decline in revenue is considered 50% or more when compared to 2019. So if we take your 2019 numbers compared to 2020, you need to go down at least 50% in revenue. I know that this is very rare. A lot of people have not qualified under this one. For 2021, when they made some of those changes, they expanded it and actually made it a little bit easier to qualify for the credit in 2020. 2021. So for that, we still take the 2019 pre-pandemic figures and compare 2021's numbers, and you only have to experience a 20% or more decline in revenue. The credit's determined per quarter, so you don't have to qualify for all quarters to be able to claim them. You can do it one at a time. These are just some examples of the suspension of operations that we see. I won't go through this whole list, but some major ones for credit unions are if you had to close your lobby or limit the amount of members that could be in at a time, change your hours, have your members make appointments. We've seen, several credit unions that were impacted as well, depending on where your location was. If you're located in a hospital, for example, then you're really limited on members being able to come into the credit union. So those all qualify. So what quarters can you qualify for? State chartered credit unions can qualify for the second, third, and fourth quarters of 2020, as well as the first, second, and third quarters of 2021. Federal chartered credit unions can only qualify for the first, second, and third quarters of 2021. Very recently, I know we've received a lot of questions about this. The IRS did issue a memorandum for federal credit unions. I believe this was written in July, but officially released on August 18th, regarding the eligibility. The CUACG has been operating this way, and I know several other places have for a while, but what the memorandum confirms is that federal chartered credit unions are not eligible for the ERC in 2020, but they are eligible in 2021. This doesn't apply to state. The reason for this is in the IRS as the nonprofit status, FCUs and state CUs are set up a little bit different. So that this memorandum does confirm that information. If there are any federal credit unions that did claim the credit for 2020 before they realized that this was a requirement, they will be required to pay this back and should go ahead and file an amended return to make sure that gets paid back to avoid penalties. So what is the max refund? Your maximum refund is it's calculated on qualified wages. So for qualified wages, we take employees' gross salary as well as health insurance premiums that are paid by the credit union. For 2020, the maximum refund is up to $10,000 in qualified wages, 50% of that for the whole year. And then for 2021, it's still $10,000 in qualified wages, but it's 70% for the first 3 quarters. So state chartered credit unions are eligible for a maximum of $26,000 per employee if they qualified for all 6 quarters, and federal chartered credit unions are eligible for a $21,000 max per employee for 2021. So what does that mean for the credit unions and how big of refunds are we seeing? It really just depends on the number of employees you have, the pay rate, how much you cover in insurance premiums. We've worked with several clients. We've done over 115 credit unions. We've seen a very large range on sizes and what the qualifications are. As few as 2 employees to over 30, and then as many as 6 quarters all the way down to only 1. The total credit that we've seen for these 115 credit unions is over $20 million.
Yeah. So just want you to think about that real quick. If you have 10 employees and everybody makes over $10,000 in 1 quarter, if you look at the previous slide, each employee will qualify the max of $7,000 per quarter. So if you have 10 employees that make over 10,000, that would be 70,000 per quarter. And if you happen to qualify for all 3 quarters in 2021, that's 210,000. Then if you want to add, 50,000 for 2020 as well, because that goes back to 50%, you can see how this adds up very quickly. So, just by that one example of 10 employees, they all make over 10,000 per quarter. That can be, 260,000 if you qualify for the employee retention credit. So I know some, people listening might have, a lot more employees, or they might have a lot fewer employees, but, it can really add up pretty quickly if you have, the more employees, the more, you'll be able to file for it. So, just wanted to, kind of take a moment and just kind of let that sink in for a moment. So each quarter you qualify for in 21, that's $7,000 maximum per employee. And then it's 5,000 annual rate for 2020. So, just let that sink in for a minute if you're, really considering the ERC.
So how do you file and claim the ERC? For each quarter that you qualify for and are claiming the employee retention credit, an amended 941 or Form 941X is submitted. If you have a payroll company that completes your payroll and files those 941s for you, they may require that they file the 941s. So they can do that. If not, if you work with CUACG, that is something that we can prepare and file on your behalf.
Yeah. Like Amanda said, we like to, give the opportunity for the payroll companies to file the returns. But the payroll companies will probably charge you $100 to $200 for each 941X, and with CUACG, it's free. This is not a marketing plea or anything like that to get you to use us or anything like that, but this is just an information session to let you know everything that we found. So I thought it was very very helpful that if you go through the payroll company, they'll probably charge you to file each of the returns. And the 941X as well, you don't really change the original quarterly 941s that was filed. Whenever the quarter happened, it would just be a small amendment to it. So you're not actually changing the original form. You're just filing a small amendment to it, a 5-page return that, that is easily can complete.
Yes. And one benefit of claiming the ERC is this amendment only affects the employer portion of the payroll taxes, so you do not have to do any amendments or changes for your employees' W-2s or the taxes they paid.
Yeah, so that's a very big point, that you don't have to worry about going back and changing any W-2s or having the employees refile their taxes or anything like that. So none of that is taken into effect. It's just an amendment going forward. There's many businesses that have applied for this as well, and that's all public information as well. So, I see there is one question that we have, and I will wait to the end and we will discuss that topic. So, and for the one that brought the question, we're going to answer it, I promise.
So is there a deadline to claim the credit? There is a deadline. The IRS says 3 years after the end date. For all quarterly tax returns, the IRS considers April 15th of the following year the file date, unless you file later, which hopefully not. So for 2020, the deadline to file amended returns to claim the ERC is April 15th, 2024. For the 2021 year, it's April 15th, 2025. If you are considering the credit, you've got some time still. It's quickly approaching, but we're not there yet. But do keep in mind there could be some processing times. It takes a little time to look into all the government orders and make sure that you qualify, and then do the calculation. And depending on your payroll processor, I don't know what things are like currently, but I know really in 2022 when it was really big, some payroll processors were taking up to 10 weeks to get those amended returns filed. So you just want to make sure that you get, if they are required to file it and they have a processing time, that you're getting all the information to them to file on time as well. So if you choose to take the credit, how do you account for it? So the IRS has set this up as a refund towards the employer share of Social Security tax expense. So when you receive it, you would post it as a credit against your employer Social Security tax expense. There have been some debates on if you should recognize the income when it's received or wait. The IRS does have a look back period of 3 years to audit. For the ending period for credit unions is the third quarter of 2021. They have extended this to 5 years. There's a possibility they'll extend it to 5 years for all the quarters. That's a proposal that's in motion right now. We recommend that you talk about it with your auditor and make a decision on what is best for the credit union. Some are going to go ahead and recognize the credit, while some put it in deferred income until that audit period is up. The factors that are going to affect this decision are individual to the credit union, but it's going to be dependent on what the credit union's qualifications are, what kind of risks they're willing to take, and all of those things.
Yeah, and just one thing I want to add here. The IRS is, if you file the 941X, you're probably going to get the money from the IRS. We really haven't had any that we know of actually be declined. So if you actually file the, amended 941X, then you're probably going to get the money from the IRS. But, then as this key point here says, the IRS has a look back period of 3 years. So, and if you receive it this year, they can pretty much 2028, something like that as well. So, like I said, you're pretty much going to get the money, but it's up to your risk tolerance of, if you think that, you will, and everybody will, we feel very confident that everybody will, pass the audit. Like Amanda said, we go in and look at state requirements. We go in and look at government requirements. We have big folders of all the different requirements that, affected credit unions and stuff like that. We know credit unions are essential companies, so there are a lot of, regulations that, affects credit unions out there. We've been into the OSHA database, the government regulations. We've, even drilled down to county regulations as well. So, we feel confident that credit unions will qualify for the credit. But everybody knows the IRS, just like you can be audited on your, personal tax returns, you can be audited on the, the employee retention credit as well. So we don't want we don't want to scare you off. We don't want to do anything like that. But, CUACG feels confident that credit unions will apply based on all the regulations that we've looked up. But we also want to let you know that the IRS, can, audit you up to 3 years. And, that's not say that everybody will be audited or nobody will be audited. But, that's just like with your personal tax returns, you can be audited with that. It's kind of a random chance. So we want to, everybody to know up front that, there is a possibility of you being audited, that if you do file for it, that you probably will receive the credit. But just like that with the IRS, they can always go back and audit you after that time. So I don't want to scare anybody off, but we want to give you all the information up front.
Yes, I think the next slide we get into some warnings from the IRS. And this kind of goes back to what Marcus is saying. The IRS has issued several warnings to employers about the ERC. There are several third-party promoters. They're very aggressive in promoting it. I know we've worked with several clients who have received solicitation, mail, fax, email from these other companies. The acting commissioner of the IRS, he, even came out and said it is a very legitimate credit, but what you need to be worried about is the promoters who may mislead you if they promise that you're going to receive a credit. The IRS is auditing these and conducting criminal investigations. They've set up a specialized email to email in any claims if you have a third party that's aggressively soliciting. So the IRS is encouraging people who are due the credit to take it, but they are just warning to make sure that you use someone that you trust to do the calculation. So how do you proceed? We believe that the credit unions who qualify should absolutely take advantage of it. Some things, I pulled all this from the IRS website. We look into this very regularly, but some things that you should be worried of are the advertising schemes, direct solicitation. The IRS also warns you to look into third-party promoters who guarantee a qualification or charge a very large upfront review fee. So if you speak to somebody and they say, well, you're definitely we can get you qualified, that's something you want to be wary of. Not everybody will qualify if you didn't have to have any changes to your operations. So that's kind of what the IRS is looking at, making sure that if you claim it, you are qualified, because if you hit that, audits are always random, unless there's somebody that calls and submits a tip. But if you're audited, can you back up the information? So what CUACG does is we take a look at your qualification, make sure you're qualified. Like Marcus said, we keep a list of those government orders so that if in the case that ever comes up, you have all the backup and you can say, this is why I qualified, and know for sure that you did. The IRS does remind taxpayers that you're always responsible for the information that's reported on the tax return. So making sure that you use a reputable source for your information is going to help limit your risk. So who can CUACG help? If you have more than 25 employees and you're located in Florida, Georgia, or Alabama, we cannot complete the credit union or the credit calculation for you. Or if you have a payroll provider that you are an employee of, that files your 941s with several other companies. But we do have some resources we can help. We can get you information if you fall in that category. If you have under 25 employees in Florida, Alabama, or Georgia, or any number of employees outside of those 3 states, we can help you as well. As long as your payroll processor allows it and we'll use our numbers, we can help you. If not, we are more than happy to get you information.
Yes, and just quick note, our parent company has a sponsorship or a marketing agreement for people over 25 employees in Florida, Alabama, and Georgia, but that marketing agreement doesn't apply to any states outside those, all the other 47 other states as well. So just wanted to add a quick tip in there, or quick thing. This is the information for CUACG's website. We have some ERC general information on the website, as well as a questionnaire. This questionnaire is what we look at when we're helping to determine if you qualify under the suspension of business. It goes through some different qualifications, and then as long as you qualify for one day of the quarter, you qualify for the whole quarter. So we don't have to know specific dates. We just need to know for each situation, is the quarter impacted at all? Yes. Oh, quick note as well, not a marketing, but ours is free. You can easily go in there and complete the questionnaire. Whenever you hit submit, it will be sent to Amanda and myself, and we will review it and get back to you, within a couple of hours, or, at least a couple of days, depending on when it is submitted. So, to complete the questionnaire, go to that link down below, cuacg.com/ERC. And then everything that we talked about in this slide will be there. And then, like I said, if you complete the questionnaire, it will be sent directly to Amanda and myself. So I believe it's time for questions. And Amanda, we did have a couple questions if you can access it. Okay. Number 1 says, this credit union didn't have a decrease in revenue. So how do you qualify under the suspension of operations? So I will go back to that slide, the suspension of operations slide real quick. You can see all the different ways that you might apply for under the suspension of operations. Now, we know especially in 2020, it was very heavy that, the lobby was closed, or at least credit unions had drive-through only, or, employees working from home or anything like that. So, if you had, any of these items or several of these items on the list, you might qualify for a quarter. Like I said, in 2020, a lot of credit unions qualified under the lobby closure rule. And some credit, I know COVID happened, picked back up in 2021. So there might be another lobby closure for a quarter that you might qualify in 2021 as well. So, these suspensions of operations, this is a good list of different ways that we've seen credit unions be impacted. So if you can check the box on any of these in quarters in 2020 and 2021, you will qualify under the suspension of operations tab.
Yes, and we take these this is part of the questionnaire as well. We look at these and see how you were impacted. Then we also that's part of the government regulation side of it. We go in and look at it to make sure that there weren't, because unfortunately you can't just, even if the business was impacted, it can't just be because you chose to close the lobby. There needs to be some kind of government regulation. In 2020, I believe everyone was shut down a little bit, and most of 2021 as well. But we do look at that to make sure that the government orders back up the claims.
And we had another question come in. It says, do the government order requirements that we just talked about also follow the same 2% rule as the reduced revenue rule, or can it be any impact so long as it was a result of a government order? So if I understand the question correctly, there are two ways to qualify. One is the reduced revenue, and the other is the suspension of operation. So those are two separate things. So if you have the reduced revenue, you will qualify. If you were impacted, lobby closure, anything like that, you will qualify. So, and in order to the operation side, you don't need the reduced revenue. So those are two separate things. So I hope that I answered your question correctly there. So you don't need a reduced revenue to qualify for the full operation. So if you gained revenue, you can still, qualify under the, full or government shutdown side of it. And then Amanda, I'm going to let you take this one, but if filed and then audited, will there be an interest and penalties excess in addition to reclaiming the funds?
There could be. If you file for the credit and you were audited and you did not qualify, then there would be interest and penalties. And if you are audited, but you are found that you have all your information, you can back it up, you did qualify, you will not have to pay the penalty or the credit back. You would just have the headache of an audit, which I think everybody goes through occasionally with the IRS. But if you were found to not qualify, then there would be penalties and interest. And that's one of the reasons that the IRS is really warning against using some of these third-party companies. They're calling them ERC mills, where we just want to get the information out there. If it doesn't hurt our feelings, if you don't use CUACG, we just want the credit unions to use somebody reputable that's not going to lead you in the wrong direction.
Okay. The next question is, if only one branch was closed and they make up less than 10% of the assets, can the operational rule still be used? Amanda?
Yes, they can, because it's not about assets. What we would look at is how much really income comes through that branch. So if your branch is, if you have a branch that had to close and they didn't have any member traffic normally, then it might not qualify. But as long as you're having members that come in there and do transactions, then it did impact your members and it can qualify.
Next question. Under the suspension of operations, how many of these different characteristics need to be met?
There isn't a set number. You can, even if you have one of them, you can qualify. Some of these, it really just depends on the number. The increased cost of supplies, if that's your only factor, you're probably not going to qualify because everybody had that, but it wasn't really due to a government order. But if you had increased cost of supplies because you had to buy the partitions to put up to keep members and employees separate, then that would qualify. So it really just depends on what goes into it. So that's why we take a more in-depth, individualized look.
Okay, well, I will, give everyone a minute to see if there's any more questions that may come in. But as you can see, that was the last slide of our, presentation. So, as you can see here is mine and Amanda's contact information. If you want to connect with us on LinkedIn, that is our, addresses are down below. Cell phone numbers, you feel free to call or text us anytime. Preferably not before 8 in the morning or after 5 in the afternoon, but we'll be happy to answer any questions that you have or anything like that. And of course, our email addresses are right there. So, feel free to contact us, feel free to email us, feel free to call us at any time. Looks like we do have one more question that come in. We filed in, this gentleman says he's filed and received the funds. Are there any ways we cannot utilize the refunds received? Can you explain more about making the entry to Social Security tax expense? I'll take this one real quick, and Amanda, if you want to chime in on anything, but the IRS guidance is a credit to Social Security tax expense. So that is, under most credit unions, general ledgers, that is, a 220 expense. So Social Security tax expense. Their guidance is to put it as a credit to that, then of course, put the checks in and debit your corporate account. That is what the IRS states. So that is what we tell, most credit unions of how to book that entry. I know it will send the Social Security tax expense for a big credit. That is just that is just the IRS guidance. So, I can't really give you too much more, information about that. That is just what the IRS has put forward, and that's what we've been telling credit unions, even though it's going to probably show as a big credit on your call report for employee. Well, never mind, on the call report, I believe the expenses are added together for salaries and stuff like that. So, or I might be mistaken. So don't quote me on the call report. CUACG doesn't audit the call report. So, but going back to answering how can you use the funds, you can pretty much use the funds for whatever you want. If you want to pay employees a bonus, just making a suggestion, not suggestion, but just letting you know how other credit unions have handled it. We've seen bonuses, we've seen computers being purchased, we've seen just about anything, funding accruals. Back last year, it was probably funding allowance account. Now it's CECL and stuff like that. So we've seen a lot of ways for credit unions to use the funds. There isn't any particular way the IRS states. The only thing they state is that it should be a credit to Social Security tax expense. That's, like I said, that's just what the IRS states. If your auditors told you something different, then of course follow what your auditors told you. But we're just telling you what the IRS said.
Yes, and on the call report, Marcus, it might not. It does get lumped together, but for example, if you received the credit in quarter 2, so you reported a higher expense for employee compensation and benefits in quarter 1 than you did in quarter 2, the call report will give you an error, and you have to go in there and just write a note explaining it. So there's just I've seen that from other credit unions. 2 other things about using it: if you do not account for it before you receive the funds, and that's just part of the nonprofit, you can't say we're going to receive this. So until you actually get the checks, don't account for it. And then the other thing, if you do choose to like Marcus said, there's nothing from the IRS that says how the funds need to be used. That's really up to the credit union, what the board votes to do. If you use it to give employee bonuses or increase in pay, that does need to be ran through payroll, like a normal bonus would be.
Well, good deal. I know many people have said in the question and answer, will this be recorded? Can you have access? Yes, we'll give anybody access that wants the access. I'll be happy to share the slide deck with you. We're happy to share that with you. If you want to text me, my cell phone number's there, email me. That way I can be sure that you will get a copy of it. We do submit this to people, and our marketing people does trim it down to, make sure everything's look good, take all the extra information out of it. So, probably give us a couple of days and we'll be able to, share this presentation with you, they're recorded, or if you would just want a copy of the slide deck, make sure to, if you email me or Amanda, we'll be happy to give that to you as well. But I don't have any other, questions that come in. So I appreciate everybody's time today. And hope everyone has a great rest of your day.